Hello traders, welcome back to the channel. Janoy here with Trading the Charts Pro. Guys, we're back to break down the overall market, look at all the indexes to see what are the charts telling us right here as the S&P 500 start to pull back along with all the other indices. So, on this channel, we like to look at the charts and see what are the technical levels that we should be looking at as our guide to know if this market is ready to break down, or are we gonna get another opportunity to buy the dip or buy the bounce of support as these index pull back. A lot of stocks follow the S&P 500, so when the S&P 500 is pulling back, this is a typical time that a lot of those stocks that mirror the S&P 500 will also be pulling back. So it's very critical for you to understand what the S&P 500 is doing as a whole so that you can know what are the levels it's good to move in to start buying back some stuff if you got out of some stuff in the short term. Alright, so that's why we try to break down the charts and understand how price action actually moves so that we can use this as a guide, this as a tool in our toolbox to navigate, these super technical markets. All right. So let's dive right into it, guys. On my window here, you can see I have all the time frame pulled up, looking at the S&P 500 in our daily chart or weekly chart, our 1 hour chart and the 4 hour chart. The reason for this is so that we can see how price is correlating and all the time frames. This gives us an opportunity to really see on a granular basis when price is rolling over or when the bounce has started to take place. For example, on a smaller time frame, which typically builds from the small time frame up into the larger time frame. So what that means is that if price action is going to bounce on the hourly chart and the hourly support level, you will typically see that foundation start to build on the hourly chart before you will see that bounce playing out on the daily chart. So it is critical to be able to use all of these in conjunction with each other to see what's the low risk level. Right, so looking at the S&P 500, guys, or the SPX, which is the overall market, the most critical thing about this market is the trend. All right, so we're using the trend line as a guide to know when the bull run in the short term is pretty much over. Right, so as you can see on the daily chart, I mapped out these levels at the trend line with a quick arrow, and what this is showing us is that every time the market actually pulls down to that support level over the last year, zooming out, these are the levels that we had price bouncing, and typically that is right at the uptrending support line. All right, so I like to call this is my support, and because the market is on a upward trend, it's called our upward trend support. All right, so right now the market literally started rolling over as of Tuesday. When the market last opened, we can see when we zoom in for the last 4 days, guys, the market has done nothing but literally pull back after running up and then just slowly topping out right here. It doesn't mean it's all over, but where things start to get really critical, at least in my opinion, is here at this trend line. So this trend line also, we can use the 50 exponential moving average as the support for this trend line. So when the market actually opens tomorrow, it'll be critical to see, does this market push down to the 50 exponential and then we start getting a bounce into Tuesday, or is this market going to break down and just start reversing, or not necessarily reversing all the way down, but are we going to get some form of retracement, or is this market pulling back or will pull back to the 200 SMA? All right, so these are the critical levels that we should be watching to see when it is clear that the market has topped out and the trend is no longer the trend, and the market is going to start doing something else. All right, so if we come back in and start looking at this in all the time frames, we can see clearly, guys, that the market is at that trend support right here right now in the S&P 500. So what is next? Do we get a breakdown? Does this thing pull down and come back to the hourly horizontal level, which would take the market around to the 4,380 level, and that's this last level that we bounce off the trend line. So in this case, the market will break the trend line in a short term and come back and bounce here on a horizontal basis, which means that the pattern has changed somewhat in the short term. All right, so for the S&P 500, that's how I'm looking at it. On the weekly chart, guys, we can see very nice strong week. You know, do we break down and start reverse? These are the levels that is critical that we should use as guide to figure out when the market opens into next week. All right, so that's for the SPX. Let's look at the NDX. All right, guys, last week we talked about NDX. We're gonna zoom out, go to big picture so that we can see these pointers. So SPX, NDX, excuse me, trending nicely. Break out of the trend earlier last week. Here, boom, popped out, but the market just started moving sideways. And here, as of Friday, the market break the uptrending resistance, which typically, if we're gonna get a move higher right here in the short term, price normally bounce off that trend line and give us a move upwards. So right now the index is pulling back. I'm looking to see, does it come down and hold this horizontal level here? If we don't get that, then guys, I'm looking for the Nasdaq to come back right down into the shorter term support level right here, and then from here we get a move back to the upside. If that level doesn't hold, then it's obviously clear that the NDX would be looking to come back down all the way down to its long-term support level, which would be around 14,500. So technically that's like almost 1,000-point drop in the NDX. So we got to be cautious at these levels as price pulls back, but we also have to understand what are the levels that we're using as guide to know, hey, is it going to go lower, or this is specifically where I'm looking to see price bounce. If we look at it on the hourly basis, same thing. We have this level, which uptrend resistance level, which we were hoping that this level would hold as support on the hourly level, but right before the market closed last hour, this thing just took out that level right there. So I'm pretty much looking for this to come down to the 15,300, which was a short-term support level before we break out. And if that level holds, then we can look to get a base build here before we start moving back to the upside. If pressure or want to say if there's excess supply in the market, then we can look pretty much very clearly to see this level get taken out and we come back down to this shorter term, which is this short term support here at the 50 exponential moving average. And from there we will have a lot more information to see where is the market gonna go from those levels. All right, so let's move on over into Dow. Let's look at Dow. All right, guys, so the Dow Jones Industrial Average has been doing nothing too much for the last weeks. All right, and what's critical is, this thing had run up before the S&P 500, then it started to pull back. We can see it made a high 35,631, pull back down to the trend support in the short term trend, and then we bounced and we just started to roll over. So now this thing has broken the 50 exponential moving average. Where is this thing going? All right, I'm looking at it to see this thing come back down to the horizontal level or horizontal support, which is around 33,000, right? And this 33,000 is going to be pretty close to the 200 SMA for the Dow. Also, guys, we have to pay attention. The Dow is falling on increasing volume, so this is a sell-off. What's critical is how much more is this market going to sell off, and is everything just going to start dump, or is gonna just gradually be a short sell-off? What's really gonna determine how deep these sell-off really go is the levels. All right, so if price comes down and hold these support levels, then we're looking for things to stabilize and price start moving again, possibly sideways and then to the upside. But if we come down and we break these critical levels, we can definitely look to see selling volume continues to pick up, and that would only shove all of the indexes further to the downside. All right, so let's continue to watch those levels and see what we find. Now, last one that we want to look at is Russell 2000, right? So guys, we talked about this last week. Russell 2000, it is very clear, guys. We're in a channel, right? And last video, I said we're approaching, this resistance low. So it's ideal to start lightening up a little bit, hold some, to see if this thing attempts to break out to the upside. But clearly, it run up last day, pull back just a little bit. Day one sell off, day two confirmation on the sell off. So definitely day two is when we'd liquidate everything and try to wait to see how far down this comes. Does it come back down to the horizontal support, or is this a situation where we are just pulling back to the 200 and then starting to go again? Price action will dictate or show us exactly what to do and when to do it. All right, if we look at this thing on the weekly time frame, we can see it's even more clear that the Russell 2000 is in a very strong channel, right? So only thing we have to do is just wait for it to come back to support. When it comes back to support, as long as it stabilizes and we get the bounce, then we ride it up to the upside again, using the shorter time frames as our guide for the confirmation, for the bounce, to know when to execute, to know when to jump in, when to go long. All right, last thing that we want to look at, guys, is the VIX. So remember, the VIX move inverse of the actual market. All right, so every time the VIX picks up, start to move to the upside, guys, we can pretty much anticipate that the market is going to sell off, right? When we look at the VIX, we can see that this thing, guys, this thing has been holding this $15 level very strong. It doesn't want to break below that $15 level. So here it is, Friday, we got a big spike. We got to watch to see if this VIX break out of this. If this VIX break out of this triangular pattern to the upside, this would not be good, because it would mean that the VIX can end up running back all the way up to around $35 inside this $35 level, and that will end up pushing the market down a lot more. So it's critical to see what happens when the market open on Monday. Don't get scared. It's never good to get scared when things start to go fast. Just sit back, look, and make strong, well thought out decisions. If you're a short-term trader, cut the losses short. If you're a swing trader, think about how much time you have. If you are swinging long, think about hedging some of that risk by selling out of the money calls, or using some put spreads to stabilize your position, or even call spreads to stabilize some of those positions as the market pull back. Take profits and just wait till price come back to those levels before you jump in again. All right, guys, I hope you did find some value inside this video. If you did, hit that thumbs up, and I look forward to seeing you in my next video.